Welcome to our today's revision of public finance and taxation. And today we are going to revise question number 5C of November 2015, and we shall go through the question. Amos Akida, a businessman, is facing a tax investigation by the Revenue Authority, which suspects that he has been under-declaring income for the 4 years from 2011 to year 2014. You are the end of a team from the Revenue Authority conducting an investigation of Amos Akida. He has submitted to your team records of his private and business assets and liabilities from 1st January 2011 to 31st December 2014 as shown below. Required taxable income of Amos Akida for each of the 4 years ended 31st December 2011, 2012, 2013, and 2014. Ignore capital allowances, so you are advised to ignore the capital allowances. So we'll go through the major things that one needs to have in mind to be able to present the answer as required in this question. So one of the most important things to realize is that Amos Akida is under investigation. Amos Akida is under investigation because he has been suspected to be under-declaring his income. He was making his payments of his expenses from the profit of the business. So these ones will be determined and ended. Then we shall give a relief of the mortgage interest, because in this particular question we are told that he had taken a mortgage loan, and on that mortgage loan he was paying some interest at the rate of 15% per annum. The Income Tax Act allows a taxpayer to deduct from his taxable income the amount of mortgage interest that was taken for the purpose of building or buying a residential house. In this case, the Income Tax Act allows a maximum of $150,000 of the mortgage interest to be deducted from the taxable income. So again, we shall consider that which is given in note number 3. Then the other thing which is very important in this question is to know the format or the pro forma which will help in getting the taxable income of Mr. Amos for all the years. So the pro forma should basically show all the assets and all the liabilities over the years. And this is what we are going to present in our answer right now. So the capital statement is for Mr. Amos Akida. So capital statement. For the years ended 31st December 2011, 12, 13, and 14. So our capital statement will basically include those years. So we can start on the far end, the year ended 31st December 2014. So 31st December 2014, we have 31st December 2013, we have 31st December 2012, we have 31st December 2011, and then we also have 1st January 2011. It's important to include that, 1st January 2011, 1st January 2011. Now, since the figures are big, we can show that the figures will be in thousands. So our figures will be in thousands, shillings, thousands. For the purpose of ease working. So the first items to indicate in this are the assets. The assets. Now these assets are both for business and personal. Business stroke personal. So all of them will be shown there. So assets, both the business and also personal. So we will show the total, because basically that is what we need in this case, the total assets. Total assets for each year. Now, for purpose of understanding how we get those totals, we'll do some little workings here. So workings for the totals. Workings. So for instance, for 1st January 2011, our assets includes what? We have factory building. We have a factory building of 48,000. And we also have plant and machinery. Plant and machinery is 24,000. We also have motor vehicle, MV, commercial, 12,000. We also have inventory. We have inventory, 4,600. And we have trade receivables. Trade receivables, 3,950. We have the private residence. The private residence, which is 8,240. So we are including the private residence because there we have said the assets are both business and personal. That's why we are including the private residence in our total of the assets. Then we also have the cash balance. The cash balance is 3,400. So all these then we will take a total of all that. Take a total of all that. So we have 48,000. We earned 24,000. We earned 12,000. We earned 4,600. We earned 3,950. We earned 8,240. We earned 3,400. That gives us 190,000. So that will be our figure for total assets for the year ended January. This is for the year ended 1st January 2011. So this is 1st January 2011, our total assets. So this would be our total assets. So this figure for total assets is what we are supposed to transfer here to our pro forma, 104,190. 104,190, the figure is in thousands.